Hello everyone, this is Palak Jaiswani from the Kothari and Company, and today I'll take you through the regulatory amendments which came in year 2025. So the year 2025 has been the year of significant amendments, right? From so many amendments with respect to related party transactions. Then there was amendments for HPDLE, several amendments for SEBI registered intermediaries, even MCA as well. So let me take you through it one by one. First, we'll start with SEBI related amendments. First, and the major amendment was industry standard notes on related party transactions. So earlier, the disclosure was required to be provided as per the limited information provided in the SEBI Master Circular. This industry standard notes details out the disclosure which are to be provided before the audit committee and shareholders for approval of RPTs and is divided into three parts. Para A, which is the disclosure required in case of all RPTs. Para B for specific nature of RPTs, and Para C for material RPTs of specific transactions. This ISIN was first introduced by SEBI along with the industry standard forums in February 2025, which was then later revised in June 2025. Presently, this is applicable from September 1st, 2025. Now, there are certain cases where this ISIN is not applicable, which are when the RPTs pertain to the exempted transactions under Regulation 23(5), when the value of transactions, aggregate value of transaction in a financial year is less than 1 crore, and when the RPTs are placed before the audit committee for the quarterly review. Now, after this industry standard notes, there was one more circular which was rolled out by SEBI in October 13, which provided a simplified list of disclosure to be placed before the audit committee and shareholders. Now, what exactly is the requirement on present date when it comes to the approval RPT? Is that when the threshold, when the value of RPT is less than 1 crore, then ISIN is not applicable. When the value of RPT is lower of 1% of annual consolidated turnover or rupees 10 crore, but is exceeding 1 crore, the ISIN is not applicable, but the circular of October 13 giving simplified disclosure is applicable. And when it comes to the third category, which is when the value of RPT is more than the 1% of the annual consolidated turnover or 10 crore, then this ISIN is applicable. Now, one very unique feature of this industry standard notes is that the certificate. So this standard requires that for all the RPTs placed for the approval, a certificate is to be provided by this either CEO, MD, WTT along with the CFO, which states that whatever transactions are being proposed for the approval are in the interest of the listed entity. Then we'll move on to some amendments in HPDL and SMEs. So the amendment regulations in March basically that changed the thresholds. The thresholds for the classification for HPDLEs was 500 crores, which was then increased to 1,000 crores. And the provisions relating to corporate governance, which was applicable on HPDLEs earlier in Regulation 15 to 27, same as for the listed equity listed entities, is now being shifted to Chapter 5A specifically. And the most important amendment for HPDLE was the approval process for material RPT. So earlier in Regulation 23 regime, there was requirement of audit committee approval and shareholder approval for material RPT. But pursuant to this amendment, now there is one more layer of approval added, which means that after audit committee, the company has to approach the debenture holders for obtaining their NOC prior approval in the form of NOC. Basically, the prior approval you have to obtain from the debenture holders, which will be routed through the debenture trustees. And thereafter, you will approach the shareholders for their approval, where the shareholders which are related to the transaction or are related parties can participate in the voting and can vote in the favor of the resolution. Now, this approval process is applicable from 1st April 2025. There was one more amendment which was on SME with respect to the RPTs. So the Regulation 23 regime, which is presently applicable on equity listed entity, is now also become mandatory for SME listed entities as well. Now, apart from the industry standard note, there were 2-3 amendments which came later on with respect to the RPT. First was regarding the scope of retail purchases. So in the December 2024 amendment in LODR, the exclusion of retail purchases was provided from the definition of RPTs, but then the scope was only restricted to the retail purchases by employees and directors. There was a later circular which came in December 19, which extended the scope to the relatives of directors and KMPs as well for the purpose of retail purchases. Next is scale-based threshold. Now, the earlier threshold, which was there for the material RPT, which is 10%, which was 10% and applicable for all the listed entities, has now been substituted with the scale-based thresholds, where the thresholds for determination of material RPT will be dependent on the annual consolidated turnover of the entity on the scale-based basis. So for entities where the annual consolidated turnover is less than 20,000 crores, the threshold would remain the same 10%, and the minimum upper ceiling is 2,000 crore. For 20,000 to 40,000 crore, it is 2,000 crore plus the 5% of the above margin. And for 40,000 crore, the amount is 3,000 crore plus 2.5%. So along with the material RPT thresholds, there were changes in the threshold for significant RPTs as well. So earlier the threshold was only 10% of the standalone turnover of the subsidiary, but the idea behind changing this thresholds was that in certain cases where the transactions are hitting the bracket of material RPT, but at the same time they are not getting covered in the thresholds of the significant RPT 10% of the standalone turnover of the subsidiary. So to bridge that gap, now the criteria is based on lower of the following. That means the 10% of the standalone turnover of the subsidiary or the material RPT thresholds of the listed entity, whichever is lower. And in cases where the aggregate value of RPT in a financial year is up to rupees 1 crore, then irrespective of whatever the thresholds are, the approval is not required. Now, apart from the related party transactions and HVDLEs, there were certain amendments with respect to the dispatching of annual report, and there was amendments on circulation of hard copy of the salient features to debenture holders. So earlier the requirement was that the hard copy of the salient feature is to be provided to the holders who have not registered their email IDs with the entities. But that requirement has been done away with now, and it has been made at par with the equity listed entities, where a simple letter containing the web link of the annual report can be then circulated. And the requirement of Regulation 56, which requires the issuers to make certain submission to the debenture trustees. So there was no timeline provided under that regulation earlier, which has now been provided as 24 hours. Next, we'll see some circulars. So on the position of compliance officer. So this amendment came in December 2024, where the compliance officer's position was redefined, that the compliance officer has to be a whole-time KMP and not more than one level below the board of directors. So there was a circular issued in April, which clarified the term of meaning level, where it was mentioned that one level below means the position of the compliance officer in terms of the functional organization structure, organizational hierarchy of the company. Then there was also a circular on amendment on ESG ratings. So the timeline, which was 10 days earlier for the review of ESG ratings in case after the publication of BRSR report, has now been extended to 45 days now. However, when it comes to the review of ratings on account of any occurrence of material events, the timeline of earlier 10 days still remains the same. Next, we'll move on to industry standard notes on Reg 30. So, Regulation 30 Industry Standard Notes provided guidance on the timelines, manner of disclosures, and reporting in case of Regulation 30. Some of the matters were relating to the expected value of impact, where the reference was provided to PPR test. And then, in case of disclosure of regulatory actions to be made for regulation for clause 19 and 20 under para A items, the list of sectoral regulators and enforcement authorities were also provided. Also, when it comes to determining the outcome on cumulative basis for pending litigation and disputes, that guidance was also provided in this industry standard notes. There was one more industry standard notes which was issued pursuant to ICDR, which was on key performance indicators to be disclosed in the draft offer document. Next, we'll see some other SEBI regulations. So moving on to the first one, which is the PIT regulations. So the definition of UPSI provides an illustrative list of items which can be categorized as UPSI. So that list was amended to include certain para A and para B items of Party Schedule 3, which are called as team material items or items subject to materiality thresholds. And it is to be noted that this list is an illustrative list. Then there was one more circular which was regarding the freezing of PAN. So the earlier, in case of publication of financial results, the PAN freezing pursuant to trading window disclosure was applicable only on the designated persons, which has now been extended to immediate relatives of designated persons as well. Next, we'll move on to ICDR regulations. So, first one being is the faster right issue. So, pursuant to amendment in ICDR, the right issue timelines has been significantly reduced, and the requirement of submitting the draft of a document to SEBI has now been done away with, and the said of a document is now to be submitted to the stock exchanges. There was one more requirement with respect to the mandatory demat of shares of promoter before approaching the IPO. But then that requirement has now been extended to the key stakeholders, which not only includes my promoter group entities, but the KMPs, directors, some employees, as well as the selling shareholders as well. Okay, so moving on to the SEBI NCS regulations. So the due diligence certificate under NCS regulations, which is required to be provided by the debenture trustee at the time of filing the offer document and at the time of making listing applications, has been revised to make it in two parts: one for the secured entities and other for the unsecured entities. Then there was a circular which was issued in 2024 for reduction in the face value from 1 lakh to 10,000 rupees for NCDs. And in this December 18 circular, the zero coupon bond debt securities had been included in the eligibility of that circular. Moving on to the ESG debt securities, in NCS regulations along with the master circulars, the framework was earlier provided for the green debt securities, but that was later amended to make a broader category called ESG debt securities. So presently, the framework for ESG debt securities has been provided in the regulations, which includes not only the green debt securities, but my social bonds, sustainability bonds, and sustainability linked bonds. Then there was an amendment on the electronic bidding platform. So electronic bidding platform is a platform where the private placement of NCD happens, and the mandatory limit for making the issuance through this platform was earlier 50 crores, which now has been reduced to 20 crores. And earlier, the platform were accessible to only the issuers of NCDs, non-convertible redeemable preference shares, and commercial and municipal debt securities. But now the issuers of certain other type of securities, such as REITs, InvITs, commercial papers, security receipts, etc., can also approach this platform. Next, we'll move on to debenture trustee regulations. So the amendment came in 25 in debenture trustee regulations, where the SEBI listed out the permissible activities which can be undertaken by the DTs through a separate business unit. So basically, that would mean that activities which are not currently regulated by SEBI or regulated by any other financial sector regulators are to be undertaken by it through a separate business unit by the debenture trustees. This amendment also introduced a standardized format of debenture trustee, which is as of now yet to be notified by the SEBI. And this amendment also listed out the rights of debenture trustees in addition to the responsibilities and obligations. Pursuant to this amendment, there were three circulars rolled out. One was regarding the recovery expense fund. So recovery expense fund, the circular was always there, but the list of expenses which can be claimed from this circular was never expressly notified. This circular provide a specific list of expenses which can be claimed from this fund without the approval of debenture holders. However, in case DT intends to use this fund for any other type of expenses, they have to obtain the prior approval from debenture holders. There is one more requirement added in this, that a certificate from independent auditor on the utilization is also required to be provided to the stock exchanges. There was one more circular regarding the corresponding obligations on the issuers. So basically, there was a requirement on DTs as per the DT Master Circular to provide certain information to stock exchanges. However, there was no such requirements on the issuer. So to ensure that the DTs are able to fulfill their reporting obligations, corresponding obligation has been put on the issuers now. And this circular provides the timelines where the issuer has to make necessary submissions and provide necessary documents to the debenture trustee. Next, we'll move on to SAST regulations. So, in SAST regulations, a circular was issued where they have introduced an online filing system for the purpose of reporting the interstate transactions or interstate transfer of shares as per Regulation 10, Sub-Regulation 7. Another amendment came in SBB regulations where if an employee who is holding who has been granted any options under any ESOP scheme and is a part of identified as a part of promoter group, and such benefit has been granted to that employee 1 year prior to the filing of the draft document of a document, then that employee can continue to hold and exercise such options and benefits. There was one more amendment which came in merchant banker regulation in December, which is very much on the similar lines of the debenture trustee, where they have listed out the permissible activities which can be undertaken by the merchant banker through a separate business unit. And there were certain amendments introduced in the eligibility criteria and capital adequacy requirement of that. Some new limits and provisions have been issued from them with respect to the liquid net worth requirements and minimum revenue generation as well. So after this, we'll move on to AIF regulations. So earlier, the category 2 AIFs were allowed to invest only in unlisted securities, but now they have been allowed to list in listed debt securities as well. And moving on to the next one is RTA regulations. So on similar lines of debenture trustee and merchant banker, activity-based regulation is provided for RTA as well, where any services which is provided by the RTA to unlisted companies are to be provided through a separate business unit only. Next, we'll move on to NSE and BSE circular. So there were certain circulars issued by the NSE BSE with respect to the XBRL filings. One being on the integrated filings, which was issued in December 2024. And there are two, three matters more. One is regarding the filing of Regulation 30 Sub-Regulation 5 intimations in the event of awarding, bagging, or receiving of any or termination of any orders or contracts. And other one is regarding Regulation 50, which talks about the prior intimation of the meeting of board or shareholders or NCT holders in case of basically it talks about the prior intimation to be made to the stock exchanges in case of meeting or under Regulation 50. Next, we'll see an informal guidance scheme. So, informal guidance scheme was revised in November 18, and there were two, three basic revisions which was provided. One, that the scope of the present scheme has been expanded to include the following eligible participants, namely stock exchanges, clearing corporation, depositories, and managers and trustees of pool investment vehicles. There were certain revisions in the timelines and fees as well. It is one more very unique point which this scheme provides is that after a period of 90 days, the entity can approach to SEBI for redaction of the confidential data from the public domain with respect to that informal guidance. Okay, so that was all for the SEBI part. Now we'll move to the MCA part. So in this year, the last tranche of the V2 to V3 shifting happened, and some 38 forms were shifted to V3. And along with the shifting, there were certain amendments rolled out by MCA with respect to the formats of the various forms as well. One amendment which was there with respect to the board report of the company was that the company is required to disclose the compliance of the provisions of Maternity Benefit Act. And another was requirement on the compliance of POSH provisions. So earlier the requirement was to give a statement regarding the constitution of a committee under the POSH Act, but now the provisions required that the company has to affirm on the compliance of the POSH provisions, as well as provide the details of the complaints which they received during the year, resolved, and how many complaints are pending during the year. Moving on to the next one was regarding an amendment in MBB rules. So the exemptions under Section 186, which are presently applicable, which presently provided to the banks and NBFCs as well, has now been extended to the finance companies which are registered with IFSC as per the IFSC Finance Company regulations. Another amendment was regarding the thresholds of MSME, where the thresholds for micro, small, and medium enterprises has been increased. One more amendment was regarding the limits of definition of small company. So the limits which were there earlier, 4 crore and 40 crores, has now been increased to 10 crores and 100 crores for the paid up share capital and turnover respectively. There was one more amendment regarding the fast track merger, where earlier the fast track merger was only applicable in case of startup companies or WS with its parent. But now the scope has been expanded to include where the merger is between two or more unlisted companies, subject to those certain conditions, or between two or more fellow subsidiaries which are unlisted. And it also includes the cross-border reverse merger, which means an Indian WS is merging into the foreign parent. So that was all for the FY 2025. But since we are into FY 2026, so several new amendments are in actually pipeline. So we'll just glance through as to what all amendments have been actually approved by the SEBI, but are yet to be notified, which will soon be notified in FY 2026. One was regarding the minimum public shareholding under ICDR. So SEBI has approved in its board meeting that the minimum public shareholding limits as well as the timelines will be updated soon. So on the screen is provided the timelines. And there was one more SEBI board meeting which happened in December 2025, where it is proposed to increase the limits of HVDRE from 1,000 crores to 5,000 crores. And there were certain amendments proposed in HVDREs to make it at par with the eco-delisted entities. With respect to several registered intermediaries, the amendments are in pipeline for stockbroker, mutual funds, and etc. So that is all for today. Thank you so much.